All right. Well, good afternoon, everybody, and welcome to the end of day market review for Thursday, May 10th, 2012. My name is Jason Waugh, one of the trainers and success coaches with Ideal Trading Lifestyle. I'm going to be walking us through today's presentation. Now, I had mentioned this earlier, but just so everybody is aware, we are experimenting and working with a new technology which is going to ultimately bring these presentations to our customers in a cleaner, more efficient package. We're always doing what we can to make sure that we're on top of the technology and on top of being able to bring these presentations to our end customer. So what we've done is we will have these presentations now viewable from mobile devices, whether that's from one of your Androids or your iPhones. These devices will be compatible with the presentations. Obviously, this is going to be great for anybody who's on the road or who isn't necessarily going to be able to watch the presentation because they're at work and might be busy in the evenings. Yeah, so today it's a little bit rough. I don't have a clean cut, polished presentation, but we are still going to be going through all of the content, and we should have everything clean cut and polished for tomorrow. So with that said, we're going to start today's analysis by taking a look at the market news. Here we just want to get a good idea of what's been going on a global scale and how it's affecting the US markets. Now, we have had some declines for the last 6 days or so. Some of those declines have pushed the commodities into some significantly lower levels, but we did see some optimism today, and that optimism was due to a decrease in unemployment records. So we've got a small increase there. Nothing has been resolved with Europe. We are still looking at a debt crisis going on there, but with the slight bit of optimism, we're able to have a little bit of an increase today. Now, oil also worked itself up. It's up about 0.10%. It's up to $96.91 per barrel. Looking at gold, gold is still in the red. It's down to 1594. It really isn't even much of a loss at 0.01%. When you look at the Dow Jones, we've managed to work ourselves up 0.16%, and the S&P 500 up 0.25%. So they are modest gains, certainly nothing to be overly excited about, but it is something that's new considering what we've seen over the last couple of weeks. So what we have now is the where do we go S&P 500, and what we've got here is the 6-month chart and the most obvious levels of support and resistance, which have been set in place for the month of April and May. We can see first off that the momentum is generally declining, and we've had the 5 days of losses throughout the month of May. What we've got now is some support which has been found around 1350. We believe that we're going to find support yesterday because the candle stopped at that support level, and we've been able to confirm that today. So we do have support at 1350, and we do have the MACD, which is still declining bearish with the black line down below the blue line. This means that, yes, we did find support today, but no, this doesn't necessarily mean that we're going to be on our way back up into clear blue skies. In fact, the gains were so small that it really could just be a hiccup in the big scheme of things. Luckily, we don't need to be able to make this decision. We don't need to be able to predict the future. All we need to be able to do is look at our charts and look at what they're telling us right now. And right now, the charts are telling us that there is some support, but not enough to get into and trading stocks from our basic watch list. And as a result, our basic customers do not have any stocks showing up on their watch list today. Now, our advanced customers, you're going to look at this and you're going to acknowledge the fact that there has been some support. You're then going to be able to take this and apply it to your own watch list picks. Or if you're trading ETFs, you're going to be starting to look at some ETFs that will mimic the market's gains tomorrow morning. This will only happen, though, if we see an increase in the futures and positive news. If we see any sign of negativity, we're going to be expecting that the S&P 500 is going to break down below its 1350 support and continue its declines, in which case we would be looking at inverse ETFs. All right, taking a look here, we've also got our volatility indicator. Volatility indicator did work itself up to above 20, but it's worked itself back down today. Currently, it's down to 18.83. This is a improvement because we know that traditionally over the months of March and April, 20 seems to be the highest range of our volatility. And having that volatility increase yesterday started to shake a few feathers. With it being back down to 18.83, we can be a little bit more confident that the markets are stable. They're not being overreactive to the negative news. It also means that they're not going to be overreactive to the good news and cause false breakouts. We really aren't going to be too concerned with the volatility indicator until it really crosses through the 25 and definitely into the 30s. Though regardless, we are dealing with a declining bearish market condition, so we need to make sure that we're exercising extreme caution. For basic customers, sitting on the sidelines, sitting on your cash, waiting for the markets to correct themselves. This is also an opportunity for you to take a look at some of our other products or courses, such as the advanced course. The advanced course gives the customers the ability to get into the markets sooner once they're ready to turn around and hold on to those positions longer. Another alternative, obviously, is our ideal trading lifestyle picks. We've got 3 different markets that we can choose from: Canadian, US, and ETF. An example would be yesterday, there was a stock that showed up on our ideal trading lifestyle list, and this was for our US customers. The stock was OCN, and although it didn't go down to its fill price, you can see that it had itself a great day today, opening up at 1561 and working itself to a high of 1587. So definitely some good profits have been made there, and we've got a tremendous success rate that's been going on with this. Now, our ideal trading lifestyle picks are not always consistent with our basic and advanced disciplines. This is a great thing for our customers because it allows us to get into and identify trades that'll be lucrative before the rest of the market does. So if anybody is interested in any of those picks, please let us know. We've constantly got picks coming up on our list, and we're working at about an average of 2 to 3 picks a week from those watch lists. So with that said, reviewing what we've got here, not a whole lot left for our basic customers tomorrow. Looks like you're going to be sitting on the sidelines for the weekend and seeing what you're going to end up having happen tomorrow. If something happens worthwhile and we've got some watch list picks, you'll be able to identify those and trade them on Monday. Otherwise, enjoy yourself and your weekend. Hopefully you guys will be enjoying as much sun as we are here in British Columbia. We're expected to have 27, 28 degrees throughout the weekend. So we'll be having a mini summer. But before I close the line, does anybody have any questions? Anything that they'd like me to review? If not, we will end this presentation and touch base again tomorrow. All right. Perfect. Well, as always, I'd like to thank you guys for attending today's presentation. We will have this video online and ready for your viewing within the next hour. Have yourself a good rest of your day. Ciao for now.